real estate, I think business in general is about relationships. And, you need to forge the right relationships and connections to be able to tackle something of this size. So you need to have a good mortgage broker on your corner that knows multifamily, knows what they're underwriting. Where are the points of leverage that I can use, which is, we always talk about OPM, other people's money, OPT, other people's time. Right when I decided that I was going to take it seriously, my license expired. So I had to go and do the courses again.
That's
you'll never get in a coaching program or a book. Most of these things that a coach can teach you, they're imparting their wisdom through experience. But until you get your own experience, it's not going to hit you to your core.
Welcome to another episode of Real Estate Conversations with Harsh. And today we have a seasoned real estate professional with over 7 years of experience in real estate. He is the founder of Yada Group and is passionate about revolutionizing the real estate investing landscape by simplifying the process of finding and managing assets to add value and lower the barriers to entry. Currently, the group owns and operates about 130 plus units and is on track to close another 150 plus units within this year. That's 2023. So they're right on target to be closer to 300 units. We'd like to welcome Fabian Fraser to the show.
Hey,
welcome, Fraser.
How you doing?
Yes, you're doing good. Excellent. Doing excellent. How have you been?
Not too bad, man. Not too bad. No, I was just gonna say, my grandfather passed away last week. It was kind of hard, but he lived a long life. He lived a full life. He died at 93 years old. So it was, it's good to see the family, get everyone there again, and kind of put put life in perspective, for the things like, my family had to look at the things he had to leave behind and, sort out his will, sort out his assets. He was in Trinidad, he was actually a little real estate mogul himself. He did development. He owned tons of land. And he created in his town one of the first commercial buildings. So even those things, I learned a lot about him, which it feels good to know that I got something passed down to me in that real estate, knowing that he was in real estate so heavily. So it was quite a bit of a learning experience. Yeah.
Wow. So it's in the blood, eh? Real estate in the blood.
Yeah.
You inherited it from generations. Wow. And our condolences to the family. I hope everyone is settled and everyone is now, like, the loss cannot be covered, but I hope everyone is settled now.
Yeah, we are. Thank you.
Okay. So we'd like to get started with your background, your story as to what you were doing before getting into real estate. I know your family is already into real estate and has been there for many years. So I get, yes, that you are into real estate, but were you doing anything before? Where you studied? When did you come to Canada? All those kind of good things about your story. So please share with us your story.
Yeah, so I think I'm a second generation Canadian. My dad was born in Canada. I was born here as well in Toronto. My whole journey, it's kind of been like a shadow of it's kind of funny because I've been to different, like, growing up, especially in my high school years, I went to different schools. My parents were very strict on education, but I was more strict on being the class clown, I would say. So, like, I actually, when we were talking about Trinidad, my parents sent me to Trinidad, and I lived there for a year and a half, almost 2 years with my grandfather, which was quite a journey. I went to school there, and that within itself was an interesting experience of getting a different perspective, living in a different area, because it's like more of like a second world, third world country in that part of the Caribbean. A lot of Caribbean countries, they're kind of like that. So
Yes.
that was interesting. And then, coming back, I went to a Christian school, which was a different perspective again. And then I went to military school, which was another perspective of being being, like right when you go through the door, they started shaving my head and started yelling at me. So that was during my high school years. So it was pretty interesting. And then kind of like fast forward, I was always entrepreneurial. So like my first entrepreneurial thing I ever did was like getting into online marketing. So kind of trying to sell affiliate products, doing affiliate marketing, uh, doing web design, doing, I don't know if you ever heard of something called cash gifting, all types of things of trying to like in the just doing that search called how to find money, how to make money online.
Yes.
So
Yeah, I know. A few years ago, that was the buzz. We also
that was
tried.
the buzzword. Yeah. So
We
anything on the first page of that search, I tried it.
Yes. No, and we tried that too. And I think it was in 2017 that we tried it. Yes. And we kept on doing it for approximately a year.
Okay.
The drop shipping and that Shopify thing. So we
Okay.
did do it. We did do it too.
Yeah.
Alas, it didn't quite really work out as we wanted it to be.
Yeah. And then as you said, that my parents, they've been realtors, residential realtors for over 20 years. So that's always been a shadow of,
Yes.
joining the family business and getting involved there. For me, it was like seeing how hard my mom and my dad have worked.
Yes.
Showing houses, doing staging. I used to help them do staging, um, lifting couches and doing, hanging pictures. So that kind of, and like, the weekends, the evenings. So that kind of showed me a lifestyle that I didn't, it like, you could see, like, we lived a very good life. My parents are like successful, but
Yes.
just the hours, I did not want that for myself. I wanted to find something which got me into the internet marketing or all these other endeavors in search of finding something that I can, build something that could be on autopilot. I know that's also a buzzword too, but I think people want to be able to find something that's passive. So it allows them to have time, to live their life, have time with their family, have time with their kids, have time to just maybe just sit around and watch TV all day, honestly. Right?
Absolutely. Absolutely.
Like just to be able to have that luxury that you don't have to work, right? Like even the fact that like my grandfather's funeral, I could go and spend that week in Trinidad. I don't have to talk to a boss. I don't have to, put in a request. That flexibility is why I think a lot of people at the core really and truly want to become entrepreneurs and want to be able to do these type of businesses, and especially which real estate is like the perfect segue into that, right?
Yes, absolutely, absolutely. So I guess you have never done any kind of job. You were straight away went into online marketing, then into real estate, or you were doing a 9 to 5 and then you left it as well.
Well, like growing up, like in my 20s, I did a lot of like I did that stuff, and didn't work out. Got a job. I worked for Leon's for a couple of years, doing
Okay.
furniture sales. That kind of got me into learning how to just approach and
Yes.
just talk to people, because that you're commission based. You have to be constantly approaching people, helping them out. Yeah, Leon's was one. Another one that kind of gave me a good perspective. But I sold water filtration systems.
Okay.
So that, like, so little odd jobs, you
Yes.
did for 6 months or to a year. And then it was in 2016, there where I kind of decided I want to take real estate more seriously. And I actually had my license, but I had let it expire right when I decided that I was going to take it seriously. My license expired. So I had to go and do the courses again to get my
Oh,
license.
that's oh
Because of my parents, I'm all like, I made sure I
yes,
got my real estate license, but then, and like, working with the family wasn't really working out. And I went to go do my own thing, and then I came back, and then I had to get my license again. And from then on, it was pretty much I wanted to go into commercial, just
yes,
because of like that lifestyle. Wanting to do this through 9 to 5. Have your weekends, and you're dealing with more professionals. And then it was something I would say it was different from what my parents were doing, so I wanted to experience that side. So
yes.
I did that.
No, which is really good. Which is really good. Okay, so Yara Group. Now, when did you form Yara Group? Like 7 years ago?
So Yada Group, it actually started from when I did my web design business. It was called Yada Solutions, and then a
Oh,
few years, and then now it's been 3 years ago. I kind of revived the name and just tied it to my real estate business. So it's about 3 years old, um, and that's kind of as long as like my investment journey. It's been about 3 years now, approaching 4 years. And
yes.
it's just amazing how fast the time has went, because I basically started in the pandemic, like just before the pandemic started, and it's been a wild ride, but it's been an amazing one though.
It's a wild journey.
Yeah,
Journey, yes. Wow. And now you own over 130 plus units. Plus, you're on track with that big deal of yours that's coming on. So you'll be close to like 300 units this year, which is fantastic and
yeah, it's
phenomenal.
pretty. Yeah, it's pretty cool. It's pretty cool.
Yes.
God is really good. Yeah.
And now I guess you have your own team for property management and all other kind of stuff, right? You have all the assistants and everything in
Yeah.
place.
So all my properties are in Nova Scotia, and the ones
Yes.
that we're going after are in Ontario. And I've established my own property management company. And it's the reason for that was, wanting to, when you're in this game, being a active investor who is raising money, your investors are first,
Yes.
always, right, for the project. So you're always sacrificing yourself for your investors. If you want to take this seriously and full time, you have to look for those ways to make money. So instead of me hiring the property management company, I invested in my backyard when I was living in Nova Scotia. I said, I will do the property management myself. So that way you gain experience, you're hands-on with the property. And just from that experience, some people say it, but when you actually have done it, it makes the world a difference. That
Yes.
when you're in the small roles, when you do the roles yourself, like you might not necessarily be doing the electrical or changing the doorknob, but it's good to
Yes.
change the lock, learn to do something basic like that. But when you're
Yes.
overseeing that yourself, you're coordinating your sub trades, you're looking at the work they're doing, and you're dealing with tenants, you're dealing with the tenancy board. All these things kind of create an experience which helps you on your journey. It changes the way you underwrite deals. It'll change the way you talk to sellers. It'll just help you. It'll help bring you value to yourself, so that when you're looking at an acquisition, you know exactly what it takes. You know the costs that it's going to take to
Yes.
get it to where it needs to be, because you've been on the front lines. You've been in the work.
Yes. Okay. So now that's a good insight. Now we want to move to the very first deal that you did, and since you said most of your portfolio is in Nova Scotia, so
Yeah.
when you did the first deal in Nova Scotia and where you are now, considering the gap, if you were to start all over again doing that first deal, what would you do different on that first deal or the second deal? Now, because you now know so much and now there is much more experience, which was not there when you did your first one.
That's a great question. I don't think a lot of people are going to do this on their first deal. Being a professional, you're more closer to real estate than to someone who's looking to get into real estate to just quit their 9 to 5 and they have no experience whatsoever. As for the audience to know, my first deal was a 50-unit building in Kentville, Nova Scotia, and we purchased it for 4.1 million, negotiated a $700,000 BTV, and our first mortgage was around just a little over $3 million. So our down payment and closing cost was about 500,000, which, without the BTB would have been, our raise would have been well over $1 million.
Yes.
So that deal was a big learning experience for me because I was lucky enough to have a good coach in Alfonso to kind of help me walk through the deal. What I would have done differently was just with what I know now is this, I would have structured it differently where I would have had more control. The partners I brought on to the deal, they were active and passive. So they brought the funds, but they wanted to be involved. So because they put up all the money, and me just being a sponsor bringing the deal, I took less of a percentage just to get the experience. So looking back, I would want more control, but I can't look at the situation and have any regrets on that deal because we did very well on the project. Those partners bought me out of the project, and overall, it gave me a track record and it gave me a learning experience that you'll never get in a coaching program or a book. Most of these things that a coach can teach you, they're imparting their wisdom through experience. But until you get your own experience, it's not going to hit you to your core.
Yes.
It's not going to hit you here, into your soul, into your subconscious.
Yes.
Right. So that's just coming through, just grinding and just getting the experience down. And that's when once you've done it and you've gone through it, where things start to open up and get easier for you moving forward, and you can kind of impart the same knowledge to others effectively.
Okay, so when dealing in Nova Scotia and dealing in Ontario, you have dealt in both the places. How is it different in terms of real estate transactions when you're dealing in Nova Scotia compared to Ontario?
Very good question, Harsh. Dealing with Ontario, I've found it's a lot more faster pace because for the last, should I say close to a decade or maybe 5 years, we've been dealing with a market where it's in Ontario, where it's multiple offers, firm sales. That sort of mindset has kind of translated into commercial a little bit, with the mindset of the sellers, where they want their deals done fast. Like I got a development project I was about to get it under contract. I said I need 60 days due diligence. They're saying we'll give you 20 days. Like realistically, in the summer, how are you going to be able to get that done? In Nova Scotia, the residential market, even when the pandemic was getting, like the market was getting very hot, it was still slower pace. You do offers conditional on financing, maybe on the sale of your house. It was a lot more slower pace, which on it was the opposite side of the spectrum in Ontario, actively, right? When the residential market and the commercial market started to pick up in the height of the pandemic, when the rates were so low, Nova Scotia started to adjust and get to an Ontario style market because you're getting Ontario buyers as well coming into the market. A lot of people from the West started to enter into New Brunswick, into Nova Scotia, making strong offers with no conditions because that's what they were used to. And they were even doing it on multifamily properties as well that I was seeing. So I hope that answers your question, but that's kind of like some of the differences that I've noticed transitioning over. Now the market rates are high. Lots of things are, money's kind of coming out of the market because of the higher rates, trying to tackle inflation. I see sellers are starting to realize a little bit more that the market is changing, and then you do have a lot more time now to do certain things because there's not a lot of buyers, right? Buyers, right? Right now we're in a very unique time where all the posers, all the people who are all the big shots, or all the people who would brag, like, where are you now? Right? It's this, how good did you buy, and how good are you buying right now that is going to weather this storm? Like,
Yes.
I know a lot of people, including myself, had to take a haircut, or had to really adjust to refinance their property, especially at the tail end of 2022, right, where the
Yes.
interest rates are going up rapidly, even now going up rapidly. Seeing if you can really complete that refinance, or you're going to hit your debt coverage ratios, because people weren't really talking about debt coverage ratios when interest rates were so low, but it became a thing now that you need to look at your debt. What is the lender looking at your debt? What's your DCR for your loan? Because that's just going to reduce the equity, the loan to value that you're going to get for your property. People
Yes.
thought that, okay, yeah, I'm going to refinance. I'm going to get a minimum of 80. I'm going to get a minimum of 75. I just refinanced some properties. Now I got 50 loan to value and 60 loan to value in some of them. And we had
Yes.
to deal with that and be creative with that, right? To help our investors. And then some that we did so well that we still were able to get a major profit, because we were able to buy very well in a high market and do very well with getting our rents and everything up.
Like you said, it's a very unique time, because we are also seeing in the mortgage industry also, where the lenders, like, the Scotia has that STEP program where they give you a credit line, and TD has that flex line. What they have done now is that they have reduced the borrowing limit to 65% of the new appraised value. So, which is kind of saying that, okay, you do have the credit line, but you don't. Right?
There you go.
Yes. So, but
Yeah.
no, what you're saying exactly for this particular time where, like, we are in right now, nobody knows where we are headed. But like you said, it's very unique. We really don't know what we are going to end up in the next 12 to 18 months. We are not sure what's going to happen.
Yeah, and it's amazing because what just came to my mind was I made a Facebook post in a group on Facebook.
Yes.
Back in the summer last year, and I said that, fixed versus variable. And I told people that if I were you, I would fix right now for the short term, at least a year or 2 years, and not go with variable, because with everything that's going on, you don't know where the market's going to go.
Yes.
And people blasted me and saying, "Oh, you shouldn't be giving that type of advice to people. Variable mortgages have been stable for so long; they're not going up, they're not going crazy." And then just look, people are forced to sell because of
Yes.
their variable mortgages. Now, when you're talking about multifamily commercial, you're not getting variable, you're getting fixed. So usually in that front, you're good. But a lot of the novice investors who are just starting out trying to buy a duplex or under 4 units, or buying a condo or pre-construction, they're really feeling it right now, because, especially, to me, it's like we're never going to see those rates ever again with pandemic, unless there's something as cataclysmic as the pandemic portrayed, to kind of garner those rates again. But I don't think we're going to see those for a very long time, and we're going to be we're definitely going to be in a higher rate environment for a little bit.
Wow. Yes. No, I feel the same, and I feel we'll be there like until 2025, 2026. We are going to see these high interest rates, and after that as well, I see we'll be hovering around somewhere around that 5% mark.
Yeah, definitely. Like what the banks are indicating, and the bonds are indicating in their rates. Because if you look at long-term bonds haven't been changing.
Yes.
They have, like, usually when you're investing a long-term bond, the rate, they're supposed to give you a better rate.
Yes.
Right. But the higher rates are coming in for short-term bonds.
Yes.
Right. And then when you look at mortgages, they're charging you more money for a shorter term mortgage,
Yes.
which used to be the flip side. they would charge you less money to get a shorter term mortgage and more, it'd be a higher interest rate to get a longer term mortgage. That inverse in the market is telling you that bankers are already pricing it in that, yes, we're gonna be seeing this for a few years, but we can't sustain it forever, right? The rates are gonna have to go lower. So the banks are gonna try to front end and make that money as fast as they can, and just so that we can kind of stabilize and get out of this cycle that we're in right now.
Yes. Okay. So I want to talk about finding deals. How do you find your deals? And what are some of the strategies that you'd like our audience and viewers to know? Or what do you implement finding deals? Especially the off-market ones.
Yeah, great question. Most of the deals that, when I think about it, that I've received have been through referral, coming from other real estate investors who have found a deal and they sent it to me, or it's been through just networking with other professionals like realtors, mortgage brokers, appraisers, even property managers are a great source to just network with. I find reaching out to these people, telling them what you do, keeping them in your pipeline, constant follow-ups, and telling them what you're looking for, that, once something comes through, they'll remember your name. They'll definitely remember your name. But, when you're starting out, I think the best way is to just go on your MLS. The best way is to, connect with some realtors, tell them that what you're doing, and that's going to be the first. That's going to be your biggest source, is going to be through realtors and maybe mortgage brokers, to finding, I wouldn't say a deal, but to finding a property for sale. Yeah, I think the deal to me is to be discovered. You have to sometimes create the deal. It might not fall in your lap as a good deal. You have to create it through creative financing, structuring, create it through, trying to work the seller in different things. Even when you have it under contract, you discover something that can force a price reduction, right? Find an error in the seller's, let's say in his financials, that changes the numbers that can warrant a price reduction. So I always say that deals are not found, they're created. So with that, you might look at a deal that might, you underwrite it initially and it says, okay, it's worth me looking into. And then once you look into it and start working it, you start to discover different ways to kind of make it more attractive.
Okay. Another question. Now I'm moving on to the biggest deal that you're working on yet, the 144 unit London. You found it through another realtor, I guess, through a referral network, right? And now you have it under contract. You're working through that. Give us some details on that, because that's the exciting part. 144 units. It's phenomenal.
It's pretty amazing. Looking at like a fourplex or a sixplex deal, 50 unit deal, and then you're getting into like the millions of dollars.
Yes.
10, 20 million. Like this one we have under contract is 20 million, 21 million, 250.
Yes.
And that one was actually referred to me by an investor who got it through a realtor. That's how I got that deal. But yeah, it's a very exciting. It's the same work involved in underwriting, but it's just the numbers have changed. It's bigger numbers. Yes. You have to raise $6.2 million. So it's not like we're raising 600,000. You're adding a couple more zeros.
Yeah. Everything multiplies by 10.
Yeah, so like the work is the same, but everything kind of multiplies. You might have to talk to more people. You yourself should have a little bit more experience, or partner with people with experience to be able to handle something this size. And I feel like the journey that I've been on, where, even with the property management, where we're at a point that we can manage anything across Canada with our administration in-house and have a superintendent or a pair of eyes on site to deal with certain things on site, so that we can we have that economies of scale there to manage the properties. So it's it's a very exciting experience to be able to do this deal and to work through the numbers and to work on the financing and work on your net worth to see if you could, be able to hold the covenants on the property, assume the mortgage and all that. So
now, when you're doing this deal, you're raising like $6.2 million, right? Yes. Any advice when a person is jumping on to these kind of assets? Any cautious word of cautions or any advice that you'd like to give to any investor who's also in the same game? Like maybe they own some small units, but now they want to jump big or go big with 100 plus units.
Word of advice is don't try to do this alone. Try to build a team.
Yes.
Try to build a network. You need to have, real estate. I think business in general is about relationships. And, you need to forge the right relationships and connections to be able to tackle something of this size. So you need to have a good mortgage broker on your corner that knows multifamily, knows what they're underwriting. You need to have a good lawyer on your side who knows multifamily and knows what they're doing. You need to have your go-to appraiser that knows what they're doing and knows the area. You need to basically surround yourself with the right people who know you as well and trust you, that will also give you the time of day, that when you get into these deals that they know that you'll be able to pull through, but you have that relationship at the end of the day that they'll work with you on it. I think bigger is better. Grant Cardone would say that. I think a lot of people would say bigger is better. Trying to do something that big, it can be done. You just need to partner with the right people who can kind of take it forward, whether it's property management, whether you might need someone who can have the net worth to help you qualify. Like my first deal, like I said, I kind of had to take a back seat, take a lesser percentage because I had more experienced people in my corner who knew what to do with the project and take it forward. So I was more I found the deal and structured the deal. So that's what I brought to the table. So when you're doing these types of deals, and if it's just you finding the deal and bringing it to the table, that's enough. But just partner with the right people so that, it makes you look good. It makes you're able to accomplish the job and do it properly. When you think of people like Bill Gates or Steve Jobs, Pirates of Silicon Valley.
Okay.
It was a short biopic of kind of the feud between Bill Gates and Steve Jobs, how they created Apple and how they created Windows. And in the movie, you saw the different strategies and ways they leveraged different people. I think Bill Gates, he needed like something to help like the mouse. So he actually got that from someone. I think he paid for that patent or for that technology from someone. Even to the software, certain software things that they required, they used certain people to get that stuff done. They didn't really do all the coding or created every single thing. They leveraged the right people and the right relationships to bring the pieces they needed to create what they have as Windows and what they have as Apple and their first products offerings, right? It's like Elon Musk didn't create Tesla from scratch. He bought Tesla when they were an up and coming company, and he put his entrepreneurial vision on it and created it to where it is now. So when you're going into this journey and you have to look at it as a business, and then also look at it as like where are the points of leverage that I could use, which is, we always talk about OPM, other people's money, OPT, other people's time.
Yes.
What are those OP can you utilize on your journey to help you create that product or create that deal, form that deal that you're working on, right? To help you move forward. I hope that stuff answers the question though.
Yes, in a very detailed way. And thank you for that. That was a really nice, I would say, knowledgeable session. Thank you very much, Fabian. We really appreciate your time on the show. There was a lot of insights about Nova Scotia as well, how the markets are different, and some advice for newbies, as well as some intermediate investors who want to jump onto bigger deals. Thank you very much.
Yeah, Harsh, it's awesome. I love what you're doing. Keep going. It's awesome, man.
Thank you so much.